This week's crypto recap. Did you know Bitcoin is now bigger than silver? At least in the commodities market, thanks to the new Bitcoin spot ETFs, no doubt. The SEC and Coinbase lawsuits gets fresh eyes, and the issuer of USDT prints another $10 billion. Where is it all going? Also, stick to the end as we see what altcoin updates have arrived this week. We cover all this right here and now with Matt and Nick in the Collective Shift weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes just for you. As always, we'll start with the market update by Matt, followed by the incredible Bitcoin and silver news. So Matt, what's happened to the crypto markets in the last week?
Thanks, Leon. Another red week for the crypto market. That's about at least two consecutive weeks in the negative since the ETFs went live. So again, turning out to be a sell the news event. So buy the rumor. We saw a huge 80 to 100% sort of run up since the BlackRock, I think, applied for their ETF around the middle of last year. And then now we've seen a sell the news events once those have gone live, and looking forward to talking about how the successful the ETF launch has been so far in our next segment here. But BTC is down 2% for the week. ETH is the same. Sol is down a bit more, around 5% or so. So we really just continue to see just slowly, grinding down a bit, finding support. Importantly for BTC, probably around that $40,000 mark, I think is really important for it to just stay above that. But yeah, nothing too concerning from a long-term really perspective. One other thing I did want to comment on in terms of just the markets overall is that I did notice that the S&P 500 in the US did break through to a new record high late last week. That is one of the major sort of indices in the US in the stock market, and that was the first time it had achieved that record high in 2 years. So stocks really in general have started, overall have started this year increasing so far, 3 weeks so far in 2024. Again, probably a year ago, that would have probably correlated to performance in the crypto market, but as we saw throughout 2023, a real weakening of that correlation. And while that looks like it is holding as well, that weak correlation, as of, the start of this year as well. So something to note there. Always important to know what's going on in the macro. Really, really helps, in my opinion, with understanding, the outlook for crypto. And that's why we do, cover macro weekly for Collective Shift members.
Yeah, that's right. And you said something there, which is about the sell the news events that usually happens in crypto. And I wanted to touch on with Nick there about that. So Nick, this happens all the time when news comes out. People buy it beforehand and they sell it as soon as the news comes out. Well, what comments do you have on this, mate?
I was just looking, very closely, because we've covered a few ETF posts looking onto the wide range of spectrum of what we could see, considering the ETF was probably one of the most talked about events, in recent crypto history. One thing I actually underestimated was the amount of money, I guess, already in the ecosystem via things like MicroStrategy. I'm not sure about you guys, but that was one thing I kind of took a step back and looked at, just the amount of exposure de facto, people were getting to Bitcoin, via these Bitcoin miners, Bitcoin mining ETFs, public crypto stocks, and then people using MicroStrategy as the de facto ETF anyway. So that's probably also what I'm seeing, is maybe that probably took a bit of a hit, considering there was a lot of money already in the ecosystem, via these traditional players. But yeah, be keen to hear more from you, Matt, about how the flows are actually going.
Yeah, that's right. We've seen a huge amount of inflows into crypto. I'm not sure about the entire number, but I'm looking about a $10 million mark at the moment. But Matt, let's go on to the biggest news, right? Which is the Bitcoin ETF update. That's what's happened in the last month. Bitcoin is bigger than silver now, right? At least in the commodities market. So, there's lots of assets in the world. And when we speak of commodities, we're talking about heavy metals, for example. We're talking about silver, Bitcoin. Bitcoin has traditionally been seen as the digital gold. So Matt, Nick, are you surprised by this at all, that it's become bigger than silver and maybe next up is gold?
Yeah, I think silver was, the surprise is sort of, I guess, surpassed it so quickly. And yeah, it does sound strange to have it now just really only behind gold in terms of overall just, assets under management and the amount of just capital in these products is quite astounding, really, when you see BTC didn't even really exist, 16 years ago.
It's crazy, yeah.
But yeah, I think now we've seen sort of the end of week one, heading into week two of these ETFs, and I don't know, the consensus, it's always hard to gauge given that there was such a broad range of predictions heading into, this ETF launching back late last year when everyone was sharing their predictions. And I think it's already done, I think, over 10 billion in volume. So just how many times have these ETF, units of these ETFs being bought and sold, which I know that has surprised a lot of people, that sort of figure getting there so quickly. And then in terms of sort of the net flows, which all the ETF analysts say is the most important thing to watch, I believe that is around in between 1 and 2 billion after deducting, Grayscale's BTC product, which a lot of people are sort of saying is sort of obfuscating the data, and we sort of need to wait for that to sort of normalize once that all those conversions are sort of done and whatnot. But I think overall, people's view from what I'm seeing is that it's been a success. But a lot of people are asking, why hasn't the price gone up? But that's, I think, as to Nick's point, I think a lot of these flows are really the result of people maybe selling other things for these units, or you've even got BTC moving around between these ETF issuers where maybe they had a futures product and they're selling some of the futures, and then they're basically it's putting it on the other side of the ledger and now buying their own spot product, things like that. So that's why I don't think there's been such a huge uptick in the BTC price. And then obviously this grayscale effect of them selling BTC as well. From my understanding, I've seen a lot of headlines about that. I haven't actually followed it too closely, but I've heard a lot of fear or commentary about the effect grayscale might be having short term on all of these ETF statistics and potentially even the price of BTC. So overall, good to see them done, and the ads are starting to get rolling as well in the US. I've seen a lot of these issuers now actually advertising like on national TV and things like that, their different ETF products, which is very strange to see, and but very, very exciting really, and it shows how far we've come.
Yeah, Matt, I think we were talking about this last week when I said, they're all going to be advertising, no, my Bitcoin's better, no, my Bitcoin's better, come to this side, I have lower fees. And we see that's what's happening right now, as you just stated there. So people are trying to get people to come into their fund. So Nick, I want to come back to you on this as well. What are your thoughts about Bitcoin kind of surpassing silver, and next up is hopefully gold? And what are you seeing in the first week of the Bitcoin ETF approval?
I'm just seeing maybe a slow burn, as Matt talked about, that, it's the price hasn't really reflected. But from a lot of the research I know we were doing as a research team, looking into how, the flows might go, is, it's going to take a long while for it to probably play out in its impact on the market. Because at the end of the day, it just makes buying and holding Bitcoin much safer, much easier for 99.9% of people out there, who do not want to hold their own private keys, who do not want to trust centralized exchanges and just want to trust their, traditional asset managers, with their, crypto and their money. So I think this is why it's going to take a bit of a slow burn. And the one metric I'm watching is BTC locked in ETF products, which I'm going to be interested to see how it goes from the start of the year, which I know it was in the single figures. And I'm really, really curious to see if we do hit double figures and to how high this does get, because that's going to reflect the adoption of these products.
Yeah, that's right. We do need a bit of transparency for us to see how much Bitcoin is locked in some of these ETFs because, for example...
BTC Treasuries, if anyone wants to go to btctreasuries.net, I think it is, you get a good snapshot of how much BTC is locked at the moment in these products.
Excellent. So that's the blockchain for you, right? You can tell, and hopefully the companies are transparent enough to share that on the treasuries, and we can find out through their due diligence reporting. That's awesome news, right? And we say this before, but we've already gone past the idea that Bitcoin is like out of nowhere. It is now being considered as a commodity. And look at that, the headlines saying that it surpassed silver. Next up is gold. So already Bitcoin is a commodity. Isn't it funny how things work over the last 10, even 5 years, even 2 years, for God's sake. So yeah, that's great news. Great news to hear. Now let's move over from the Bitcoin ETF land, and let's go to the spot Ethereum ETF land. Now, Matt, I know the Ethereum ETF is highly anticipated. People have been talking about the buy the news, sell the buy the rumor, sell the news kind of thing again. But what's happening with the spot ETF approvals this time for Ethereum, Matt?
Yeah, speculation really ramping up, as you said, Leon, and people already moving on to the next narrative. And one of those is demand for ETH, or projections that ETH will outperform BTC in the market over the next 6 months. One of the reasons we'll talk about soon, but another reason is sort of the ETF potentially being approved by the SEC. Again, nothing is guaranteed, but we did see last week that the SEC did delay, sort of as expected. They delayed a decision. It wasn't a final deadline, so they were able to delay a decision, saying that they need more time, which they tend to do with these crypto, like Bitcoin ETFs and now the Ethereum ones. That was Fidelity's application for a spot Ethereum ETF, so they delayed that until March the 5th. That is also not the final deadline, so they are widely expected to do the same thing as the March 5 deadline approaches. So yeah, if you are listening or watching out there, to really sum it up in terms of the Ethereum ETF, by far the most important dates to know with respect to whether this will be approved or not, we will have a lot more of an understanding by, May the 23rd and May the 24th. Why? It's because there's two applicants, Van Eck and, the combined ARK and 21 shares ETF application. Both of them have those deadlines coming up in May 23 and May 24, and importantly, they are final deadlines. So the SEC has to either green light them, let them through, or they will have to deny them. In which case, it'll be pretty obvious, the market reaction to either one of those decisions. So it's nice to know that there'll be a forced decision, coming up in 5 months or so. And until then, I'm sure speculation will just really continue to increase.
Yeah, that's right, Matt. And just like with the spot Bitcoin ETF, the SEC was kicking and dragging themselves, and they said Bitcoin is a separate kind of asset. Ethereum does have a few other nuances that you do have to understand. So we'll see what the reasons they give as to why they're denying this Ethereum spot ETF. But let's move on, shall we? Let's go on to Nick. We're still keeping on Ethereum, though. We'll switch over to Nick here. So Ethereum is still not yet complete. I'm sure everyone in the crypto ecosystem knows this. I think Vitalik Buterin, the main founders of Ethereum, puts it around 50%. Maybe we're about 55% complete now. There are more upgrades for Ethereum coming. The next one is called Dencun upgrade. So Nick, I think you got the scoop on this. What's happening with Dencun?
So Dencun, as you mentioned, is the next big Ethereum upgrade. That was rumored to be launched last year, but ended up sort of being pushed back just for safety reasons, and really ramping up testing in the last few months. So the first testnet went live over the last week, which was successful, but there was a small hiccup in its rollout. Essentially, a few of the nodes and validators failed to reach consensus in the expected time, so there was a little bit of a hiccup. This was noted by Ethereum developers because of a perhaps lack of participation amongst the older network validators. So not everybody was sort of upgrade, so this caused a few issues. It's hoped when it gets rolled out on mainnet, obviously everyone will be updated and we may not see this. So only a small little hiccup there, but all roads lead to another testnet on January 31, end of this month, and then another final one on February 7. So this is going to be a big test. If we see another hiccup in these testnets, we may be closer to an April implementation and mainnet. Because there may be a few more bugs to work out for developers. But if all goes ahead then with no more consensus issues, no more issues with older validators not updating, then we may see closer to March rollout. So this is just a huge one because, as we've mentioned a lot in the podcast, that it's just going to be really important for L2s to become much cheaper to use. So we're going to see possible subset transactions, making a transaction on Uniswap should be about a cent if all indications are correct, which is a huge catalyst for L2s who are trying to compete with Solana, who are just offering incredible low fees, and it's just a really competitive market at the moment for a lot of blockchains and a lot of L2s out there.
That's right. Not every L2 is going to survive. It's going to go to the cheapest, fastest, and the most secure, most likely. So we'll see what that triad turns out and which L2 is the best out of all of them. But yeah, let's and for all those traders out there, I just want to let you know these dates are, take it with a grain of salt, because development in the Ethereum ecosystem and crypto in general is very, very difficult. And so one small setback could set a chain of other setbacks that could come. So if you're planning to make trades based on the dates here, please be very, very wary about doing that. And let's move on then. Let's talk about Tether. We've talked about Bitcoin. We've talked about ETH. Let's go to the number 3 market cap. And why it's number 3? Because they keep printing more Tether. They keep printing more USDT. Sorry, Tether is the company. So let's go to Nick, my friend. Tether has printed another $10 billion in the last couple of months. What's happening with them? Even though it's still not the most trusted stablecoin, they keep printing.
Tether has been probably along with Binance, one of the most polarizing crypto companies out there. It suffered a lot of FUD, a lot of concerns about whether it was backed by anything tangible over the years. Slowly, this is coming out as a lot more trusted, considering the status and the money printing machine that is Tether, the company. They don't pass on the interest rates, so they're just they a very profitable company. It's a very profitable business model.
Very easy margins.
Keeping the interest rate from the treasuries for themselves and to secure their cryptocurrency. So they're about to pass the $100 billion mark, which is going to be a huge moment for them and for the stablecoin ecosystem. And another 10 billion was added in the past 3 months. So we're seeing a lot more stablecoins being issued, which really tells us a lot about the market. And another really interesting side effect is just that Tether continues to buy more Bitcoin. I think I saw them buy another few $100 million worth of Bitcoin as they really transfer some of their excess capital and profits into Bitcoin.
Yeah, I think, Nick, we covered that last year when they said we've got a lot of money just burning a hole into our pockets, so we're going to go ahead and secure some of our business with some Bitcoin behind the scenes. So maybe they might be on the Bitcoin Treasury's website, and we'll see if they're on there. But that's very interesting, Nick. I wanted to ask you what's the actual indication for that when Tether increases its money supply and goes up by another 10 billion? Does that simply mean that there is $10 billion worth of cash of US dollars that a retail person or an institutional person has given to Tether, and that's how it works, right?
Yeah, so this is probably one of the points of conjecture is where I see a lot of people get concerned about when a lot of people throw out the idea. I'm not sure you've seen this, Matt, but people will say, Tether's just printing another $1 billion and they're just propping up the price of Bitcoin. That was a common, I think I saw in the bull market and in the past market cycles. But to me, it's rather probably a simple thing that Tether just sees more demand when appetite for crypto increases. So obviously their supply increases alongside Bitcoin because they're very correlated with interest in the market. So that's just what I see as stable coins bouncing from their, I think, lows in the end of 2023. We're starting to bottom out and we're seeing interest in the space continue to increase, and that's only what I'm going to start to see as we start to see more stablecoin legislation. I know in Singapore, in the UK, people are going to actually start to use stablecoins practically, which is only going to increase their supply, and things like Circle, USDC, and all of the other possible other stablecoins like PayPal, USD are going to really come to the forefront and see increased adoption, and this is only going to translate to higher market caps.
Yeah, I think coming back to the main point that you did make there and that I asked about first is, the general flow is just, people are more interested in Bitcoin, and so they want to transfer it into a stable coin, which is less friction. And it doesn't just have to be in the US, it could be anywhere around the world. People in Venezuela or Argentina, and they take their profits into stablecoins sometimes. And Tether is technically the one with probably the highest liquidity, and so they like it more. Very simple.
They also have about 0.3% of the Bitcoin supply. I just looked at Bitcoin treasuries now. So
interesting. Very nice.
To see these metrics as Bitcoin becomes more adopted, more legitimized, whether we're going to see more Bitcoin kind of consolidated with some of these bigger players.
Oh, that's excellent. And they're only going to keep accruing more Bitcoin because they still are taking the interest on our stable coin and they're earning more. And so they can just keep printing and keep buying more Bitcoin. Very interesting business model, don't you think? I think we should start our own stable coin company. Let's go to well, we might get in trouble if we start our own stablecoin company, according to the SEC. So let's go to the SEC, my friends. Let's talk about the SEC and Coinbase lawsuit, Matt. So there's been an update on this, right? This is SEC is going after a whole lot of different people, saying this is a security, this is a security. What's the update with the Coinbase v SEC?
Yeah, so there's a few active SEC lawsuits. I would say this is the most important one for like investors or just industry participants or people to be watching, because it is, the ramifications of it are vast. Really, we're still at the stage of the judge deciding whether the case should continue, and if so, like will it continue based on all the points that are being argued or just some of them. So last week there was an important hearing in the New York District Court where they were arguing to the judge about really how cryptocurrency should be classified. Coinbase obviously arguing against these cryptocurrencies being deemed securities, saying that they're more like beanie babies or really just like collectibles, as opposed to equity stakes in a company. Then you got the SEC, as we've covered many times on this podcast, arguing that buying a currency is really the same as basically buying into an issuer's enterprise, and sort of when that enterprise does flourish, so does the token price. So sort of trying to draw that connection there. And yeah, again, the judge, at least from what I have read, like didn't really seem to, agree too much with the SEC's argument, but this is only sort of preliminary stuff. To really wrap it up, what are we actually sort of looking for here? Where's this case going? We're really looking to see if Coinbase's motion, if the motion is dismissed, like either wholly or in part, the case will continue on to discovery, and that will be drawn out probably over many months and likely years as well. So we'll continue to update there, because as we've said, this whole classification of securities about cryptocurrencies, whether they are securities, even though it is just one jurisdiction, that being the US, it does have really big ramifications globally, and it is really impacting, I think, the speed of crypto innovation and the amount of capital coming into the space. If they are deemed securities, that would be very bad. To put it just very brief. If they are, if they make their own regulations about how cryptocurrencies are to be regulated, and there's sort of some hybrid approach, that is viewed as very good. So we'll continue to monitor this, because very, very big implications of the future of this asset class.
Yeah, that's right. The SEC is not giving up. They still think that we're doing something wrong in crypto, and perhaps we're not following the law according to their definition of the law, which, is kind of outdated and has been outdated for a long time now. Let's move on, my friends. We'll definitely keep you updated, because every week there's news on regulation and the SEC. But let's look to ending the podcast with what we did promise at the start. Let's look at things that you should really look forward to by the end of this week, or maybe even something to look forward to next week, something you could do, some actionable items out there. So where should we start, guys? I think Jupiter is probably the biggest one that members should know about, members as well as listeners on the podcast. Are you guys familiar with Jupiter? It's one of the biggest airdrops that's about to happen, maybe in crypto, definitely is on the Solana blockchain. Are you guys going to be getting some Jupiter tokens?
Jupiter, I think maybe. I have to have a look, actually. I've been a bit lazy with some of these. I've been focused on more, I think, other ecosystems, really, or like other actually dApps. But yeah, Jupiter's going to be a big one. I think it's going to be a prolonged one, isn't it? It's not just going to be a one-off, but they're going to really try and reward a lot of different ecosystem users, and
that's right.
Kind of shaping up to be sort of maybe Solana's Uniswap moment for Jupiter.
That's right. So Jupiter is a DEX aggregator. What that means is it helps you find the best prices for whatever you want to do if you want to swap from one to another. And they have a few other features like the dollar cost averaging feature. So basically, they're giving a token to members, or to people who used the platform before when they didn't indicate any token at all. So they're saying it will possibly rival 1inch or the Uniswap on the Ethereum ecosystem. And that gives it, roundabout, speculating, a $4 billion market cap, which is pretty crazy. So this will airdrop will make people a bit of money, I would say. So that's Jupiter. Make sure you check the research notes as well as the Collective Shift platform. We've got airdrop information for you there. Now let's go on to the next one you should look out for, which is Satoshi VM. It seems to be a kind of layer 2 for Bitcoin. Is that right, my friends? I'm not too familiar with Bitcoin Satoshi VM.
I'll save you the trouble, Leon. Yeah, Satoshi VM's in this new sort of wave of projects that are really trying to integrate with Bitcoin and provide more, basically allow you to do more stuff on Bitcoin. And the security sort of guarantees vary between these projects. But Satoshi VM is definitely one that's caught a lot of attention. They launched on testnet last week, where people can, mint these testnet tokens and start using different apps that are deployed on Satoshi VM. The token actually did launch as well, I think, late last week, and is now sort of live trading on different exchanges. And, as part of that, there were several influencers who were airdropped, who agreed to sign up for basically tokens as part of, sharing content about Satoshi VM. This one was very noticeable because they all started talking about Satoshi VM more or less at the same time about a month ago. And some sort of, some sleuths on Twitter or X sort of were able to link the contract addresses together and identify certain influencers who agreed to these, to taking these tokens. Again, it's just something to be aware of. Satoshi VM may very well be a successful project in time, and it's not really uncommon to see this form of token distribution to help get a project to build awareness. However, the amount that was given to influencers was something that I can't remember the exact amount, but I do remember seeing it and being quite, having the feeling as though it was a lot more than was standard in the industry. And to me, that's a big red flag, because how you allocate tokens it's such a precious amount, and you can only do it once.
It's the only time.
Yeah, it's the only time you can do it. And it's so important in terms of the longevity of your project, in terms of how the token distribution is designed, and whether that amount is necessary for influencers at such a young time in this project's life. Like, it's not even live on mainnet. That's something that I would say was an incorrect move, but time might, we'll see how that plays out. But just a broader thing to be aware of in terms of, when you do see people all talking about the same project at the same time, it's often not a coincidence. It's often, there's a reason, coordinated, and there's a reason why that is. Often it's either payments in fiat money in terms of to these promoters, or it's payments in, the token itself. Once it launches, they may be able to unlock it sort of straight away. Is often the case as well. So a good warning there, but the testnet is live for anyone who actually wants to check out the project, because as I said, it is a wave of this trend of building on Bitcoin is something I think will be really, really big in 2024.
Yeah, it's shaping up to be the new narrative, it seems like it. But also, as you said, please be very wary out there when you see influencers all making the same videos at the same time, making a coordinated effort, then, something is up, my friends. You got to be very careful, okay? That's why we came to crypto. Don't trust anyone. Just look at the blockchain. And as you can tell, a lot of influencers got some tokens before you. So let's move on, my friends. Let's try and wrap it up. We got a few other things that we think you should know about. Solana has come out with its second mobile phone. It's now available for pre-order for $400 USDC, which is actually a pretty good deal for a new phone. Now, I want you to be wary about this as well. The phone specs aren't actually out yet. My speculation is that they're just keep going with the hype from the new phone, because what happened was, if you got the new phone and you got some meme coins on there, you could get an airdrop, and the airdrop value is worth more than the phone itself. And so people have gone ahead and bought the first phone en masse, and now they've going with the hype, they're releasing the second phone with no specs or nothing else behind it, just a little image and a blog post. But you can give them $400 to pre-order it. So if you feel like you need a new phone in about a year, maybe 2 years from now, go ahead and order the Solana Saga 2. We don't even know what it's called. It's just Saga 2. So that's very interesting. And let's go on to Berachain as well. Berachain is another blockchain that has recently entered testnet. Who's got the information on this?
Yeah, they're sort of from the Cosmos ecosystem, and they're one that I've been loosely following for, I think, at least a couple of years. And they're finally sort of gearing up for a launch of the token. and really getting onto mainnet as well. So yeah, there will be a token, I would suspect, sort of later this year. Again, trying to build in more functionality to Bitcoin as well, similar in many ways to Satoshi VM, but also very different in many ways. It's one that I've started to play around with on testnet. They've actually got some apps that are already live on the Bearer Chain testnet as well, which is good to see, and play around with some different apps. So yeah, just another update there.
Yeah, interesting. If you want to experiment and learn more about the blockchain ecosystem, about Bearer Chain, now's a good time. Just entered it. It shouldn't cost you much. Now, Nick, let's go on to the last two for these. I think Aave and DYDX, some of the biggest players in the crypto ecosystem. What's the updates with them?
Yeah, just to finish off here, we got Aave, which is one of the leading lending protocols of Ethereum. They've integrated PayPal's PUSD stablecoin. So I'm really expecting a big year for PYUSD. I'm really interested to see how they challenge Circle and to see how much value they do accumulate in their stablecoin, considering PayPal, one of the biggest fintechs in the world, and people kind of underestimate their entry into crypto still. And then we got DYDX, which is one of the biggest futures decentralized exchanges. They just topped Uniswap as the biggest DEX by volume. So we're seeing a lot of shifts in the space, especially now in DeFi. DYDX had a major upgrade to go on their own blockchain, which is a really definitive moment to see if they're successful. We may see other cryptocurrencies follow their lead, but if they're not successful, then we may see perhaps limited adoption then of Cosmos, which they're building on. So a lot to like, and yeah, PYUSD is one I'm definitely looking forward to for the rest of the year.
Yeah, awesome. It's all experimentation, and then one thing is going to hit the mainstream and everyone's going to be better off for it. And now lastly, before we finish, just a little security update for you guys out there. Trezor wallet has just come out and said they have had a small phishing attack on a third-party supplier. I think it was their support desk. And basically, the emails were leaked. About 66,000 emails and phone numbers were leaked. So please be careful if you do have a Trezor. Do not answer any emails that are asking for something. I'm going to read you out here an email from someone who posted it to Trezor. And it's very funny, right? So we could just discuss it very quickly. The email says, "Hi there, name. It's better to understand and look into your issue. Please reply with the 24-word phrase you were given when you set up your Trezor device. This data is not accessible by humans and is used to check the firmware version of your device." Now, guys, Matt, Nick, even myself, we all know if someone asks you for your 24 or 12 keyword passphrase, stay away. Don't do it, okay? Then they don't have your best interest at heart. They want to take all of your money. Would you guys agree with that?
Yeah, 100%.
Yeah, 100%. That's
100%.
Unfortunately, people still do give those seed phrases in this day and age, which is sad to see. But yeah, hopefully people learn from this experience.
Yeah, that's right, guys. Simple rule. Don't give it out, okay? That's it. Very easy, very easy. Now, let's go on and finish the rest of the podcast, my friends. Anything in the markets that we think is overappreciated or underappreciated? Matt, you take it away first.
Yeah, I think it's underappreciated just because it was last Monday, but it feels like a lifetime ago, and I think a lot of people have forgotten about it. It was really, well, what actually happened was a bridge called Bungee, which actually, good name, actually, now I think about it, was hacked. So I don't like their name, actually, if they're getting hacked. That loses a lot of reputation there. They were powered by Socket, so fears were pervading the space on Monday, thinking that Socket itself was hacked, which is integrated in so many apps and wallets out there. But it was just this Bungee one. Still ended up in 3.3 million being lost, or 3.3 million US dollars worth of different tokens. What were those different tokens? They were a bunch of different, hundreds of probably tokens out there that people just like you and me had maybe approved even a year or two ago, and we've kept that approval on. We do approvals. The idea of it is just to make interacting with apps a lot easier, so you don't have to approve it every single time. Helps with the UX. However, it leaves vulnerabilities open. In this case, the approvals were automatically done for so many different tokens that the hacker just came in, saw the exploit in the contract, and was able to basically, more or less, to dumb it down, operate other people's wallets on their behalf and sort of exploit the fact that they had approved these tokens however long ago. So the actionable thing for everyone out there. At the moment, I've noticed Ethereum gas is actually really cheap, which makes this even more of a better time to do this, is to head to, I would really only recommend here revoke.cash. There are some others, but really you don't need to go anywhere else, in my opinion, in terms of just going through your token approvals and sort of really, in simple terms, just disconnecting them or reversing those token approvals. It costs a bit of gas each time. However, it can really help you sleep at night and not falling prey to unfortunate incidents like this with Bungie.
That's right, guys. Make sure you go to revoke.cash. If you're not sure, check the Collective Shift website. We do have a guide for you there to revoke your approvals. Now, let's go to Nick, my friend. What did you find overappreciated or underappreciated in the market?
I think just L2 development, because I know that Optimism's working on their prover, which helps make sure everyone's playing by the same rules of the game. It's really important for the decentralization of Optimism, but also its security, because a lot of these L2s are still widely seen as being highly centralized. Because Optimism essentially and a few core people can have unilateral say over when things are good or when things are bad. So for the space to move forward and for L2s to gain adoption, we need security to increase very quickly. So for me, it's we're going to see, I think, the rollout of Optimism's prover. We're seeing Optimism lead the race. Arbitrum lead the race in terms of security for L2s and beginning that journey for decentralization. That's going to be a big sort of underappreciated for me this year. Is it's going to have a pivotal point for L2s and the security. If they still take a long time to get secure and to decentralize, then I'm feeling like maybe they might start to lose that market share continually. But if they, implement a lot of core security features, bring a lot more trust and greatly decentralize a lot of their operations, then I think these L2s could be in for another potentially big year.
Yeah, awesome, man. And we do cover L2s very often at Collective Shift here. I think once a month is at least a post on a new L2 that may be launching or being implemented across the EVM chains. That's awesome. We'll keep you guys updated, of course. So let's go to what I think was a little bit overappreciated, my friends, in crypto this week. I think what people cared too much about was the short-term effects of the Bitcoin ETF approvals. We discussed this very slightly before, but everyone was hoping for a giant candle or like a Godwick or a $10,000 1-minute candle as soon as it was approved. No, that's not how I think it would actually play out at all. I think it's going to be over a longer period of time. That's not how I see it. Institutions move very, very slowly. It takes months, maybe even years for funds to slowly but surely allocate small funds into the ETFs. 0.1% there, then 1%, then maybe 5% ranges just to offset the 60-40 portfolio. I'm looking at it being a slow grind rather than a giant candle immediately. So I think people were overestimating the immediate price impact of the ETF. Slow and steady is the way I say. And we're here for the long term, and I hope you are too in Bitcoin and cryptocurrency. And with that said, that's a wrap, my friends. If you're looking for more insights, make sure you check out the revamped weekly Shift newsletter. Provides free market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We'll see you next week, my friends. Bye for now.